All right, I'm about to share a secret with you. I am literally going to teach you how you can avoid paying taxes. Legally, of course. Of course. Of course. But this is what all the rich people do. Like, this is what the Donald Trumps do. This is what the Robert Kiyosaki does. This is what Ryan Pinedas do. This is what all the real estate investor gurus do. This is how you avoid taxes. And first of all, if you're new to this channel, my name is Justin Yaron, and I've helped hundreds of people in real estate. So before I actually describe how to avoid taxes, understand, not an attorney, I'm not a CPA or accountant or whatever. I'm just a real estate investor. I want to explain this in the most basic terms for you, and break down something that's kind of complex into something super simple for you to understand. So the biggest way that people avoid taxes is what's called depreciation. This is where someone can buy rental properties like single family homes, multifamily homes, apartment buildings. They buy some type of housing, right, where they can rent out. And they take a certain expense called depreciation that allows them to offset their tax liability. I know that's a lot of big words, but okay, here's what I mean by that. When you buy a rental property, you essentially get to take an expense called depreciation, and it makes your taxes lower. And you're like, okay, why would it do that? Well, the belief is that if you own something like a rental property or something like that, the value of that asset goes down over time. So this depreciation expense accounts for that, and it allows it's like a tax benefit for people to, I guess, buy rental properties. It's the government's way of saying, hey, here, let me incentivize you people to buy rental properties so that the economy's good. Most basic terms I can say, that is what it's for. Now, how does it work? So I'm actually going to bring some numbers into this so you understand. But let's say someone's out there, let's say someone's making $50,000 every single year, that's their income, and then they buy a rental property that's worth $275,000. So they buy that rental property, they rent it out for the year. Now, just because they buy the property, they don't only get the benefit of, getting the property rented out for their rent every single month and getting a cash flow. That's not their only benefit. They also get a benefit from the depreciation expense. So how it works, at least for single family homes. This is gonna be, how do I make this simple? You take the $275,000 home, and the way depreciation is calculated for how much you get to save every single year is you divide whatever the asset was worth, $275,000, divide it by 27.5. So in this case, you get a depreciation expense of $10,000 for that year. And if you're like, okay, cool, what does that mean? Here's what it means. $10,000 depreciation expense. Typically, if you did not own that rental property, you'd have to pay taxes on your $50,000 of income. So whatever tax bracket it is, you pay taxes on $50,000. Cool. But because you own that one rental property, you get to save on paying $10,000 taxes. So look, instead of paying $50,000 of taxes, which is what your income is, you're gonna take $50,000 minus the $10,000 depreciation expense. And then, meaning you only have to pay taxes on $40,000. So you're literally saving on your tax liability for $10,000. Now, just imagine, you're still making $50,000, but instead of owning that one rental property of $275,000, you own 4 more, so you own 5. That means all these depreciation expenses, that means with $50,000 of depreciation expenses, because that's what it totals to, you make $50,000, you have $50,000 of depreciation expenses, your tax liability is 0, so it wipes your income out. Now, this is what the rich people do on a massive scale. And I hope you understood that. I'll try to explain again because I know I went a little fast. But you make $50K. You have one rental property where you get to depreciate an expense of $10,000. And then you have 4 more. So it's 10,000, 10,000, 10,000, 10,000, 10,000. That's 5. 5 10,000s means $50,000 of depreciation expenses, means it saves you on $50,000 of your tax liability. So that's what it means. And just imagine this, because this is actually what happens. And most of the rich people, they don't all have single family homes. They'll have big apartment buildings because you can depreciate those too. But let's just imagine in this case, it's all single family homes for simplicity. Now imagine how am I gonna do my math? I'm trying to do my math in my head. Imagine someone makes $1 million a year and you're like, hey, like this person for sure has to pay taxes. No, they don't have to pay taxes if they do this thing. So they make $1 million a year. Now, all these $275,000 rental properties, say they have enough to wipe out their income. And what is that amount actually? Let me do the math really quick because I'm not going to do mental math on here and look like an idiot. $1 million divided by 10,000. Okay, so you would need, if you made $1 million, if you had 100 of those $275,000 rental properties, you have $1 million of depreciation expenses. So you make $1 million and you have these 100 rental properties. Now you wipe out that $1 million income with the $1 million depreciation expense. And that is how you have zero tax liability. So I try to explain this in like different ways. I hope that made sense, but this is literally how the rich avoid taxes legally. This is what the government wants you to do. They want to incentivize people to buy rental properties, buy apartment buildings, to provide housing for people. But because of that, like a lot of the real estate investors out there, like they get these huge benefits. And this is something that people don't realize, but this is how you avoid taxes. And there's other ways, like you can take, if you're a business owner, you take like other expenses away to like business expenses that you have for your taxes. But this is the biggest way. Like this is how everyone avoids taxes at the big level is depreciation. They have rental properties. They own commercial apartment buildings. They own duplexes, quadplexes, triplexes, like the 3 units, 4 units too. They own those and they take the depreciation expense. So I hope that was understandable. Like, I know it's kind of a complex, like accounting topic, but I'd really try to break that down for you. And if you just need, or if you don't understand, comment down below, tell me what you didn't understand. I'm gonna try to help you out the best I can. But if you just need help in general to grow your real estate investing business, I want you to go to the link in the description below for a free strategy session. Peace.